Good morning. It's Harvey Jackson. Just going to get through some of the news items. The most current is one most significant to Canadian canola oil and meal and seed. China suspends the canola oil and meal levies, but not the seed yet. And I say yet because the whole anti-dumping probe is not due until March 9th, I think it is. I'll see it in the article in a minute here. EPA suggests large refiners must make up the waiver shortfall. So that's the other news that hit yesterday. It definitely had soy oil go for a little bit of a run here, but we'll just get into some of the articles here. So here, this is just released overnight. Beijing China said Friday it will suspend some of the tariffs on the Canadian agriculture products imposed during the trade spat between Beijing and Ottawa after Canadian Prime Minister Carney struck a deal in Beijing last January. China will suspend 100% of the Canadian canola meal and pea import tariffs and will halt the 25% tariffs on lobster crab imports from March 1st through to the end of 2026. The outcome broadly aligns with Carney's expectations, but the Chinese announcement made no mention of the canola seed tariffs. So that's right here, which Carney had previously said that they'd be lowered. Ottawa expected Beijing to lower canola seed tariffs to a combined rate of 15% from the current 84%. I'm still thinking or being optimistic that's still going to get lifted by March 9th. So, but it's anything's possible. The other article that actually affected the market yesterday was the decision from the EPA to shift at least half of the waived biofuel obligations to big refiners, and that's more than 2 billion gallons that's going to go to the big refiners. And there's all the other sides of all of this, is still yet to be released come the end of March. So we've still got some time before we're going to find out all the final rulings of all this stuff. But this is only one piece of the many pieces of the EPA proposal that's going forward, but it's definitely given a lot of support to this market, that's for sure. Another little bit of news, some employment data came out, released for the year. Canada loses 35,400 jobs in December, almost all in high-paying sectors, and 40% of were there vacancies in accommodations and food service. But you can see that there was no jobs built by Carney. So you could actually say right here, this is the payroll employment. So there's no job increases at all for the whole year. Yay, elbows up, right? Anyway, some warmth getting pushed into the whole country, I guess, all growing regions basically come next week. But there's some weather risks that are increasing there as well. Like there's a supercell that they're talking about here hitting Texas and Louisiana. High wind, we're seeing that right now. You can see this in this graphic here, how that wind is just, and it basically takes over the whole country here as well with that warmth coming. Snow depth, you can see this is Ukraine here, and you can see Russia. There's still some snow, and then I pushed this temperature over for at least a week, and you can see that we're in the green, so above freezing at the very least. There's usual for a bit of planting at this time of year, just about to get started, and that's not super warm. Quick look at the markets, and it just seems like every morning I record canola was down for the last few mornings, but then ended up trading up, following with all the other complexes. And once the market wakes up at 8:30 Central as well. So rapeseed is up as well, where canola is down and flat basically. Soybean oil is up 0.11 of a cent, so 61.87. Palm oil is up 37 ringgits at 4,042. Crude oil is up $1.30 basically at 66.40. Soybeans up 4 cents. Your spring wheat is up just a half a cent to down 1 cent. Hard red winter is basically flat to up on the new crop, and your Chicago wheat is up 5 3/4 cents, and your Canadian dollar is actually down. So let's just quick look at it. I put some trend lines in here to watch if it breaks this trend line. That's going to be a signal, but we haven't done that. So here we are with the May contract. Slow stochastics is not a sell down here either, so it's still holding on. Same thing with the November contract, it's still holding on. The price differential between European canola and Canadian canola is now only $89. So it is not it's not going to encourage any buying from Canada to go to Europe with our pricing where we're going versus the European canola. Soybean oil futures, this is just on fire and a very steep curve going up here. Same thing with the soybeans. We've had that sharp increase, now kind of pausing here, and we're up against that that high that got made back in November. Crude palm oil is going the opposite direction, even though we have a green candle here, just not doing well. But you can see here, this article is talking about India buying. Their production is quite good. Their output is good, but not enough exports to keep that stocks quite low. So, and I would say the same thing's happening with the soybeans, but we're just not seeing it in the charts here. Crude oil futures on well supported. Looks like the next level would be in the 70s before it would actually maybe have a stall. And take note that it is above the 200-day moving average, so that is supported. Canadian dollars above the 200-day moving average, but just basically consolidating right here at the 73 plus area right at the moment. U.S. dollar below the 200-day moving average. Gold futures still got quite a bit of support. Same with silver and your copper futures as well. Here's your spring wheat May contract in this range, trying to break out of that range and trying to approach that 200-day moving average area as well. Here's your new crop. Here's your 200-day moving average. So we're getting close to it, but I would love to see it, skyrocket above that, and then we could be bullish. Where you look at how Kansas is actually trading above that 200-day moving average, and so is Chicago, remaining bullish. So it worried in the last few days, or what I've been suggesting is that if the market is going to respect that 200-day moving average, it's going to trade higher. And sure enough, we've got a couple of days now trading above that 200-day moving average for both the Chicago and the Kansas. Here's your French milling wheat, getting closer to it, but not there yet. Oat futures. It's on the opposite side. It's not it's trading up to it, but staying below. And that's all I have for you.